Alright everybody, welcome back. In this video we're going to do a little bit of a walkthrough. I get questions all the time about my morning briefings, and in the morning briefings I mention things like validating the move of the day by looking at these different products: UVol, DVol, Tick Trend, AD, Market Breadth. And when I say those things, I get all these questions from people saying, I don't understand what you're talking about. Well, let's work on that today. In the last few days, today is May 7, we just had an FOMC announcement, and then the very next day after that, we had a very large distribution day. Those 2 days will provide us with some extreme examples of exactly what I'm talking about all the time. So, for a little bit of background, we're looking for ways to validate a move, right? To confirm that there is enough opportunity to perhaps continue trying to trade the same way through the day. And this is purely focused on day trading. I think we've all been there. We see the market in an extreme behavior. Maybe it's running hard to the downside, and we think, wow, I really want to get a part of this, but I don't want to get in if it's just about to end, right? We've all been there. The market's making an exaggerated move on the day, consistent, persistent, one-sided price action, just running and running and running and running. And we begin to think, well, it's gone too far. There's no way at this point that that there's anything left for me. I better not get in it because it's very likely going to reverse. Right? We've all been there. So how can you confirm that something really is continuing? Or at least, how can you increase your, I need a word there, conviction? How can you increase your conviction that it's worth another shot, that you could yet again come in and quote, get another bite of the apple? The first one we want to focus on is when things change on the day. So here we're looking at the SPX. The Fed gave their report out at 2 o'clock. And then at 2:30, Powell came out and started talking. And he made this statement about the Fed not considering a 75-point rate hike. And as soon as he made that statement, the market just galvanized into a bullish sentiment. And we had that non-stop rally all the way into the close. Now, this might not seem like very much because in context, the next day also moved a lot. But let's just kind of measure how far this move went. From the low of the move to the high end of the move, that was 3.71%. We're talking about the S&P making a 3.71% move on the day from 2:30 in the afternoon to 3:50 in the afternoon. That's an extraordinary move. It's a very large move. It's an absolutely amazing opportunity to trade and make some money. But what I heard from everybody is, well, I seen it happening and I just really didn't trust it. It looked like it was going to turn around at any moment. So how can we confirm or perhaps validate things a little bit more? There are market breadth indicators that exist, and Thinkorswim makes it easy for you to find those. These don't only exist on Thinkorswim. They just make it easier for you to find. So on Thinkorswim, when you use the drop-down menu up here, you get these different choices. And if you choose indicators, then it shows you all these different market breadth indicators. Up volume, down volume, up minus down volume for the different indexes out there. The Dow, the NASDAQ 100, the NASDAQ Composite, the S&P, the Dow, just all these different indexes. So when I mention UVol and DVol, well, what is that? That's the advancing volume in the New York Stock Exchange or the declining volume in the New York Stock Exchange. But the S&P 500 also has advancing volume and declining volume. And then there's advancing minus declining volume, or there's, quote, all volume. So you can get all volume for the S&P 500 or all volume for the NASDAQ. Okay, so you can perhaps start to see how there's all these different tools out there. Well, what would they look like? And how can we use them to our advantage? So let me show you what one of these would look like. We're going to go to UVol. Okay. So this would be up volume for the New York Stock Exchange. Now look at Wednesday afternoon. When Powell began talking, the report came out at 2, and then he said what he said, and the market started to explode. Now maybe that's not quite enough for you, right? That would just be one piece of the puzzle, and this is only up volume. What was going on with the down volume? So on that day, the down volume just dropped, right? How much down volume we had just dropped and continued dropping through the day. The way that this works is it's adding up how much down volume we have. And that's why through the day you've seen that it was getting more and more and more. It wasn't because the down volume was increasing at a significant rate. It was the idea that each new candle added that down volume to the down volume that we had already recorded. So in the next candle, it adds up the new down volume and puts it on the list, and then again, and then again, and again. But when we don't get more down volume and we actually get less down volume, then that number comes in, right? So it's accumulative and distributive, right? So it's calculating all of that up and it's adding it or subtracting it. Well, it started to subtract significantly after he spoke. Then we can look at up minus down volume. And again, keep in mind, we're just focusing for the moment on the Fed day because everything turned very positive and we moved over 3% that day. It was a very significant, massive rally in the marketplace. And we would want to find ways to validate or confirm or in some way convince ourselves that it really is worth another opportunity, that it really is worth trying to take another bite of the apple. We wouldn't have known how far it was going to run, right? It's not what I'm saying. We're trying to find ways to validate the move and see, is the strength still there? Is it waning, right? Is it fading away? Is the momentum decreasing? Think about throwing a ball straight up in the air. And as it loses momentum, it slows down and slows down and slows down until it finally stops before beginning to fall back down again, at which point it begins to accelerate, picking up more and more speed on the way down until it reaches maximum velocity. When we're seeing something move through the day, we want to know, hey, is it slowing down? Is it running out of steam? Is it running out of energy? And so we want to look at these different tools. We want to validate this market breadth. So we've been looking at the NASDAQ, right? The NYSE, excuse me. We've been looking at the New York Stock Exchange, the up volume, the down volume, and now the up minus down volume. And it provides some clues or some perspective. Well, what else do we have? There is tick. So this is the New York Stock Exchange tick. And I understand this looks really nasty. We're going to clean it up a little bit, right? I like to use my drawing tools and use some of the tools on the platform. So if we clean it up a little, it would look a bit like that, right? Of course, we can clean it up a little bit more if we go in and perhaps make everything one solid color, easy to see. And now we can say, well, what was going on in the ticks that day? How are things going? Well, before he spoke, we were kind of We had a morning where we stayed in the negative, and then as we got through lunch, we were in the positive. And then at 2:30, he spoke, and instead of crisscrossing back and forth, we started tagging into the extremes, and we stayed in the upper end of the extreme for the most of the rest of the day. Sure, we did drop down a little bit to zero, but we came right back up again, right? So there's tick, up volume, down volume, all of those, okay? And it's just providing some perspective. What else do we have? Well, we have issues. I always like to say that. We have issues. What kind of issues? Well, in the NASDAQ, we have the NASDAQ 100. There are 100 names in the NASDAQ. And we're able to ask a question. How many of those names are advancing right now? How many companies are going up? How many companies are going down? And we can also ask the question, how many are going up versus how many are going down? So let's see what that looks like. So if we go up and we look at advance versus declining issues we're going to use the NASDAQ, that would give us something that looks like this. So on the day that Powell talked, and let me turn my lines off first, right? So this is the day that we're talking about. It's the Fed day at 2:30 in the afternoon. Right before he began speaking, we had minus 43. And this is advance versus decline. So he started talking, and then we went from a minus 43 all the way up to a 90. Now remember, there's only 100 names in the NASDAQ 100. And this is how many are advancing versus how many are declining. The reason we use advance versus decline is because it actually gives us a zero line, and then we can see above and below the zero line. But okay, let's just ask it another way. In the NASDAQ 100, how many were advancing? Not advance versus decline, just how many were advancing. This is the advancing issues in the NASDAQ 100. So at 2:30 in the afternoon, now you see I want the NASDAQ 100, and that I got the wrong one. Let's go back in there again. Advance versus decline, advanced issues. There we go. I copied the wrong thing. Let's try it again. Well, there we go. Advanced issues. Just the advancing issues. At 2:30 in the afternoon, when he made his statement, we had around 30 names that were advancing in the NASDAQ. And then he started speaking, and a lot of companies started to go to the upside. Remember, this is the NASDAQ 100 advancing issues, so we're talking about advancing companies. We went from 30 companies that were going up to 95, 97, 90, 97 names were all advancing. They were all going up. All these different markets, all these different companies, they all turned green and started running to the upside. Doesn't that give you a little more perspective? Doesn't that offer some conviction, some validation that, wow, everything out there is going up? But this is just the NASDAQ. What about the S&P? And what about the Russell, the Dow, and the New York Stock Exchange? Well, when we can look at all of those companies and we can ask that same question, then we have a lot more conviction in what we see. Right? Now, I don't want to sit and stare at these things all day, but I do take the opportunity to measure and monitor these things. So, for an example, here is the New York Stock Exchange, or the S&P 500 tick, and then we're looking at advancing versus declining, and we're looking to see, are we in distribution that day or are we in accumulation that day? Let's go in and look at these. So down here, this is the advance versus the decline in the S&P 500. This is Friday, and this is the NASDAQ for Friday. You can see how we just stayed very negative, very bearish. So what are these up here? Go in and take a look. This is the NASDAQ advancing volume, right? This is advancing volume minus declining volume. So in the top area, I have the NASDAQ advance versus decline volume. And in the bottom area, I have advances versus declining issues versus, companies. And both of these are for the NASDAQ. Both of these are for the S&P. And then over here on the far right side, we've got cumulative tick comparison. And then we have the New York Stock Exchange tick. And with these, I can see the breadth, market breadth, across the entire spectrum, right? Now, this isn't showing me commodities and sectors. It's not showing me, the futures, and we don't have bonds in here. We don't have Bitcoin in here. So there are markets that I'm not seeing, but we have a grid for that, right? We've been using the what we call the 4-horse grid. We've been using this for quite a while. That's where we've got gold and Bitcoin, the S&P and the NASDAQ, oil, bonds, the dollar, and the VIX. So we get a grid like this. We get a grid like this. And when we start to see the S&P making moves on the day, or the NASDAQ, or whatever it is that you're trying to trade, and you're trying to ask that question, is this going to continue the move? Well, you've got a lot of validation in there. You've got a lot of things you can look at to confirm. So what we've been looking at so far is that Fed day of this week, Wednesday. The very next day, we had another significant day. We had this absolutely rip your face off, fall to the ground, extreme negative move to the downside. The price action on the day fell 3.88%. But if we actually measure from where we closed the night before to where we got to our lowest value that day, that was a 4.5% move in the S&P. Absolutely extreme move on the day. And we want to be able to ask some questions like, what did the advancing versus the declining volume look like on a day like that? And what was the advanced decline line looking like on a day like that? Right? So let's go back over to the grid, and we'll just set it for a 5-day. We'll set this one for a 5-day. All right, can you see where that negative day is? I can. It's right there, right? So there was Wednesday where we went into the close, and there was Thursday. Notice on that Thursday that we stayed at minus 400 or minus 300 something, 350 all day long, right? All the way into the end of the day, we stayed negative. In fact, we closed on the day underneath 450. Okay, so very, very negative day. If we look at that in volume terms, advancing minus declining volume, you can see that all day long the volume just was negative, and it continued to stay negative. Remember, it will go up. If the negative volume decreases and the positive volume increases, then you will see this indicator go up, right? Because we're talking about total cumulative volume. It never went up, right? It never turned around. The volume stayed negative all day long, and there was never enough positive volume to turn this thing around. It's another way of looking at the market and getting that confirmation of that validation in the move, right? Does it tell us to get in or tell us to get out? No, absolutely not. We're just trying to find ways to confirm our bearish or our bullish bias and be able to ask the question, is this move that I'm seeing positive or negative? Is it still going? Is it done yet? Is it slowing down? Should I be concerned? Should I begin to take profit? Or if you're already out of the trade again, can you come back in and get another one? So we're looking at the NASDAQ advance versus decline down here and the NASDAQ 100 will only go to 100, right? So when we have advance versus decline in the NASDAQ 100 and it pegged out at 98, that was in a very extreme day. There was no positive companies. Nothing was trying to go to the upside. Everything was negative all day long. Okay? That's the kind of stuff we're talking about. Now, obviously, I picked two extreme days. Yes, because the extreme things are the easiest thing to see. They're the easiest things to learn from. They are valuable on days where we're not extreme, but it takes more learning at that point, right? You have to be more in tune with the little nuanced things that move these markets. But we can use the extremes for a very clear representation of what a down day or an up day looks like. This is the S&P, or excuse me, the NASDAQ after the Fed meeting the next day. And from where we closed on Wednesday to our lowest point on Thursday, that was a 6% move. 6% move in the NASDAQ that day. It's a very extreme move. And we were able to confirm all through the day that it was negative and remaining negative, even when it slowed down here and it tried to consolidate for a little bit and it took that pause. Even through this, it never turned bullish. None of our signals called a bottom. None of our signals indicated a reversal or a V-bottom or any kind of hesitation here. They remained negative. The negativity started to increase again, and we just kept on going. So that's what I'm talking about in the morning briefing when I mention all of these different things: U-vol, D-vol, declining issues, positive issues, tick trend, AD. These are the things I'm referring to. Now, there's a lot of names in this list, right? If you go in here and start looking, when you get to indicators, you can see it's a very long list, all kinds of different things in there. But a lot of them are just repeating themselves, right? Because there's the S&P 500 advancing issues, and then there's the S&P 500 composite advancing issues, or the Russell advance and then the Russell composite, right? So they're just repeating themselves. And you don't have to look at all of these. You could just pick one. The NYSE is the most popular one that everybody watches. That's the NYSE tick, and then the NYSE cumulative tick, and the U-vol and D-vol and advance versus decline. All of those just on the NYSE. You could just do it that way, or you can hunt around. When I'm looking for validation or confirmation, I poke my way around into a lot of different market breadth studies, just sticking my head in there and looking around, asking questions, how bad is it? How does it look compared to previous days? And I prepare for an opportunity after I got the conviction that I'm looking for. So that's it, guys. I hope this video really shines a light on what's out there. And I look forward to seeing you at the next video.